Hey folks, Dan Frio here with your real estate news for this Friday, lovely Friday morning. So mortgage rates, they went down a little bit yesterday, and we had a jobs report number that actually came in pretty good. But this morning we got some consumer inflation numbers, and it shocked the markets a little bit. Consumer inflation rose at 2.4%, less than expected. But you might be saying, Dan, I thought you said something about the January effect where inflation was going to go up. I'm going to talk about that. I'm going to talk about these. I'm going to talk about the jobs market and how those are all going to affect these things over through here. Because if you're watching this video, my name is Dan Frio. I'm actually a licensed mortgage loan officer in all 50 states, as well as Puerto Rico. If you need help with a mortgage, I'd love to help you. So let's get today's news so you can figure out what the heck's going to go on with those today and the whys behind it. So the breaking news we have today this morning is right through here. Consumer prices rose at 2.4% annually, much lower than expected. So now, is this going to give the Fed the ammunition they need to actually cut rates? Well, let's get over to this piece of the puzzle right through here. Okay, so here's what the Federal Reserve monitors, and I know I do this every day, but we got newbies coming in each day. They look at inflation, they look at the jobs market to control that rate over through there. That's called the federal funds rate. Well, this week we got the unemployment number, and it actually came in better than expected, lower than expected. Okay, so that's now the Fed's sitting there saying, okay, we cut rates because the jobs report was coming in bad. Well, inflation's still high. Well, unfortunately, we got inflation coming down as well. So what's the Federal Reserve going to do at the next meeting? I'm going to give you all the information you need today. At the end of this video, we're going to vote on would you cut or would you not? So here's the economic news you have to go off of. Okay, so here's what we got in the last 2 days. In the Federal Reserve, again, they look at jobs and they look at inflation. So jobs numbers we got yesterday, and here's what they look like. Initial jobless claims, they came out at 232 previously. These are initial jobless claims, okay? They thought it was go to 222. It actually went to 227. So it was better than it was previously, okay? Then you go down to here. So the jobs market, looking pretty good. Even initial continued claims is fairly acting pretty well. But now we go to inflation, and here's three pieces of the puzzle that we got today. It's core inflation. What they do is they strip out food and energy. And then we had CPI, they're just the general inflation numbers month over month and year over year. Well, I said that there's going to be this thing called the January effect. And it's going to increase inflation January, February-ish a little bit. And then from there, once the housing equivalent rents and oil starts to really peak and start to come down, you're going to see inflation coming down. Okay, so what's happening right here is the core inflation, they strip out food and energy. Well, that's why this went up. Okay, when you take out the energy piece, it's not going to go down. But then when you add it back in, it's actually going down. So we have consumer prices month over month was at 0.3 previously. It was supposed to stay there. It actually went down to 0.2. But here's the Moneyball number. Year over year, last reading was 2.7. It was expected to drop to 2.5. It dropped all the way to 2.4. Now, inflation's at 2.4% on the consumer side. I thought this thing was going to skyrocket. Well, you're seeing tamer inflation and a jobs market that's not falling off a cliff. So that's truly what's happening. And one of the reasons for some of these numbers is, too, the housing equivalent rent, it's starting to plummet. And you're going to hear that on all over mainstream media as well. So here's an initial effect. Let's look at the 10-year Treasury, because if you watch mainstream media and they start talking about mortgages, the first thing they say is the 10-year Treasury. Some of them don't even know what a mortgage bond is. So the 10-year Treasury, let's look at where it was on Monday. The 10-year Treasury is about 4.25, 4.24 on Monday. It's 4.08 right now. That's a massive drop in rates. Okay, so let's get over to what the bond market's reacting to this right now as well. So this news is probably pretty good news for the markets. Now, this is going to say to the Fed, the jobs market isn't crashing, the inflation isn't running out of control, you got to cut rates. So that's what the market's flashing, and that's what these codes are flashing right now. So what you're seeing on your screen right now, these are mortgage bonds. Over there is conventional loans. Up through here, these are government loans. All you have to understand is that green number up there. If it's green, that means mortgage rates are getting a little bit better. If it's red, that means mortgage rates are getting a little bit worse. Today, they're pretty much flat as a pancake, so mortgage rates aren't going to move at all. I think the markets are just adjusting from these numbers because they're sitting there scratching their head. So now if you're sitting on the Federal Reserve's chair and you're like, okay, inflation isn't skyrocketing. We know it's above 2 where we want it to be, but it has ticked down over the last few readings. Okay, that's good news. Then you have a jobs market that's not deteriorating. Remember when the big, beautiful tax bill passed and then we had tariffs pass? Everybody's like, okay, inflation's going to run out of control and this is going to be detrimental. Well, it's not so bad. So this is what's happening right through here. And now tell me what you would do What would you do if you're sitting on the Federal Reserve's chair? While you're thinking about it, last night I had a live event. If you're looking to buy a house in 2026, check out this video. We went over and there's multiple calculators I'm going to give you in this thing as well. It's going to go through affordability, which programs that really match your style, what kind of payments you're looking at. So check out that live event. But let's go back to this. In 33 days, the Federal Reserve is going to be meeting. What are they going to do? What's your vote? Let me know what your vote is down below. They are going to vote at a 92% chance, so they're not going to cut rates. They're going to keep rates right here at the, well, let's go to the probability screen. Rates right now, the federal funds rate is 3.5 to 3.75. There is a 90% chance they're going to keep it there, and there is a 70% chance that they're going to keep it there at the next meeting. We're not going to go any further than that because after that, we're going to have a whole new cast of characters at the Federal Reserve because there'll be a new head of the Fed and also one, maybe two other new members there as well. So come June, there might be some rate cuts, but you guys know, even though the Federal Reserve cuts rates, doesn't mean mortgage rates are going to go down. So subscribe to my channel so every day you can post or at least watch my videos to see what the heck's going on with rates and the whys behind it. So let's take this in conclusion. I think rates are going to be flat as a pancake today. We got some great news on the economy. Let's go over to the stock market and see how it is faring for the day. Though the Dow Jones, it was down about 100 points when I logged in earlier this morning. So now we have, well, it's not a Cinderella story, but we got the Dow Jones up, we got the S&P up, we got the NASDAQ up. But we do have oil up, but it's still below $65 a barrel, so I'm giving that a thumbs up. And then right behind us, we have the 10-year Treasury down. Let's roll the dice and see if crypto it is up. So we have almost a Cinderella story other than oil. So that is our report for this afternoon, folks. So I don't really think much is going to go on with mortgage rates. But join me at 1 o'clock today. I'll have a live event to conclude what has happened all this week. We're going to go over the economic calendar for next week to explain to you guys, should you be locking in now if you're a homeowner? Should you be buying? Should you be building? What should you be doing? So check out our live event later this afternoon. But if you need some help with a mortgage, folks, my name is Dan Frio. I'm a licensed mortgage loan officer in all 50 states as well as Puerto Rico. I've been doing this for over 35 years, and I work at a bank that's pretty intriguing, and I made up this slogan. One application, one credit pool. We're going to compare your loan to over 30 different lenders. So if you really want competitive rates and you want to do this on your own, God bless you. But if you need our help with this, just reach out to us anywhere up through there. But if you're a homeowner and you want to refinance, but you just don't know when and how, check out the RateWatch tool right over there. What I wanted to do is put in your mortgage information, let me know what rate you'd like to refinance and how much of a monthly savings also maybe you'd like to refinance. And I'll call you if either one of those trigger. If you're a homeowner or a home buyer looking to get prepared to buy in 2026, reach out to us. We'd love to help you get pre-approved, making sure you're in the right program. And we're going to go over all the programs with you because you have to understand why you're getting into that program because we want to make sure it's the right one for you and not the bank. So that's it for this morning, folks. Hope you learned a little bit of something about these things here, but inflation came in a little bit cooler than expected, so mortgage rates, they're not going to go up. The best news over here is they might be flat or down today. So check out my live event this afternoon at 1 o'clock. Otherwise, have a fantastic weekend, folks. Hope you stay warm out there. God bless, be safe, and I'll see you next week if you can't join me tomorrow. Bye-bye.